One person buys a house, another buys stocks. 10 years later, one of them is financially free, and the other still trapped working every day. So, which one actually creates wealth faster? Real estate or the stock market? Because the answer is not what most people think. Round 1. Speed of growth. Stocks can grow insanely fast. A simple investment in the S&P 500 historically averages around 8 to 10% per year over the long term. And with compound interest, money starts multiplying by itself. That means someone investing consistently every month can build serious wealth without owning anything physical. Now, compare that to real estate. A house usually grows slower in value. But here's the trick. Banks allow leverage. You can control a $300,000 property with only a small down payment. So while stocks multiply through compounding, real estate multiplies through borrowed money. That is why many real estate investors become wealthy faster in the beginning. But there is a catch.
Round 2. Cash flow. Real estate can pay you every single month. Rent comes in, the tenant helps pay the mortgage, and over time, the property may increase in value too. That creates something powerful. Cash flow plus appreciation. But real estate is not passive in the beginning. Tenants, repairs, taxes, unexpected problems. A broken pipe at 2 a.m. does not care about your vacation. Stocks are different. You can invest from your phone in minutes. No tenants, no maintenance, no calls at midnight. And dividend stocks can also generate income. So the real question becomes, do you want to manage wealth or simply grow wealth quietly?
Round 3. Risk. People think real estate is always safe. But one bad market crash, high interest rates, or empty properties can destroy cash flow fast. And stocks? They can collapse emotionally. The market crashes, people panic, and beginners sell everything out of fear. But historically, the stock market has always recovered over time. The biggest danger in both investments is not the market. It is human behavior. Fear destroys more wealth than bad investments ever will. Round 4. Who becomes richer faster? If someone has little money, stocks are easier to start. You can begin with almost nothing, and consistency alone can build wealth over decades. But if someone understands leverage, cash flow, and business, real estate can accelerate wealth much faster. That is why many millionaires use both. Stocks for long-term compounding, real estate for leverage and cash flow. Because the truly wealthy rarely depend on only one system. So, which one makes you richer faster? The truth is, real estate can build wealth faster, but stocks can build wealth easier. One requires management. The other requires patience. One uses leverage. The other uses time. But neither works without discipline. Because no investment can save someone who refuses to learn money. And no amount of income matters if your habits keep you financially trapped. The real secret is not choosing perfectly. It is starting before most people ever do. If this video changed the way you see money, hit like so more people can discover the difference between assets and illusions. And subscribe to the channel because the next financial decision you make could completely change your future.